Welcome back. You're watching Big Deal. So Neeraj, tell us about the challenges that you face in India as an investor.
See, I think if you look at where India is today, and maybe taking a forward-looking perspective, the country needs to deliver the growth. As you know, valuations, India has always been at a premium, but that is in the context of people perceiving a higher growth rate. And so I think if we deliver that growth rate, the valuations become justified. So I think, you know, being able to deliver 8-9% GDP growth, index earnings growth of 17-18% becomes important. I think one enabler of that will be ease of doing business in the country. It is still a country where, you know, it takes 50 approvals to set up a retail store. That has to change. You can't scale quickly if setting up an outlet is that complicated, right? So I think, and the government is making, you know, we are now 130. I think India is 130 in the list. The plan is to get to 90. I think that would really help. Okay. I think that is important, I think. And I think lastly, we need to create jobs, right? Ultimately, consumption is 70%. That is what has been driving GDP. Gross capital formation also needs to pick up. And there, I think private sector capex will come in as ease of business improves. And I think the government also needs to make sure that in their public spending, infrastructure is a very large component of that. Those are, you know, so in that macro context, then you will find companies which are delivering growth. We will ultimately, India is a country where people, you know, India is a country where you make your returns from EBITDA growth. Unlike other markets in the world where you have maybe lower growth, but you put on debt and through recaps and leverage pay down, you make money. India is predominantly a market where you make money through EBITDA growth. And so that needs to happen. So when you look at an investment destination, an asset for betting your money, what are the three most important things that you look at? See, I think as I mentioned earlier, the number one, and you know, by a large order, the highest priority is finding the best promoter group and the best management team, right? Yes. Because we are not day-to-day operators. We want to back people who are day-to-day operators. So I think that becomes a very important context. I think secondly, we look at, we have certain sectors and thematic views where we understand how the market might play out. And so we want to invest more in those subsectors than maybe others. And thirdly, there has to be a plan around value creation. One of the unique attributes of Carlyle is that we have a global footprint. You know, the revenues of our portfolio companies, as example, might be 135 to 140 billion. In most of the sectors or subsectors in India, we would have made multiple investments in other geographies. And so what learning can we derive from that, which makes us the best investor? If we're just as good as everyone else around the table, we have no unique insight or angle, right? So it always comes down to a value creation plan jointly with the promoter and management team that we can agree upon, which is, you know, based on our understanding of the sector, global leverage we have from Carlyle. All right, and finally, Neeraj, how soon before you write your next check? You know, it's a good question. You know, but we are looking at deals. We are aggressive in the market, and so we're looking to this is a country where we're looking to deploy more capital. All right, all the best with that, and thanks so much for sharing your thoughts, Neeraj Bharadwaj. Thanks for coming to CNBC TV 18. Thank you. So that was Carlyle's investment thesis and what they are expecting to do in the next 1 year. And that's going to be an active investment. That's what Neeraj Bharadwaj has to say. But that's a wrap on this edition of Big Deal. Thanks so much for tuning in.